What's going on, guys? This is the Bulls and the Bears here with a weekly game plan video for the wheel strategy. And first, I'm just going to talk about SPY quickly, then we'll get into a few names that we could possibly sell cash secured puts on and what I plan to do personally with positions that I already have open and whatnot. So first, SPY, this is the weekly chart. I had a big wedge here. I'll just hide the moving averages quickly. Had this big wedge and we broke below it last week. And we held below it. It looks like we had this upper wick on the weekly candle where we kind of pushed back into the wedge and it came right back down. And then we closed at the low. So very weak here. We're not oversold or anything, but you know, we have the third straight week in a row of red. Will it continue? I think it can. But there is something to consider, and that's this 200 moving average on the weekly chart. So we actually just ran into it. We're $1 below it. So we did get through it and close $1 below, but you know, it's not gonna always work perfectly to the penny. $1 of slippage past the 200 moving average and then a pop up, I'm still going to consider that as the 200 moving average holding. So will it hold next week and start to rally a little bit, have a little bit of a green week? It's possible. Going to the daily chart, it's looking pretty bad. I mean, we broke some major support that we kept trying to hold this June low back here at 362. We kept breaking below it, then pushing up, closing above it, breaking below it, closing above it, rallying on last Wednesday. But then Friday, there was none of that. I mean, we did have a little bit of a rally above 362. This is now let's go to the 5-minute chart. So we had this push back up above the mark at 362, that June low, after again breaching below it, came right back up. But then second half of the day, it just sold off over and over and over again and just about closed the low. So a very weak close to Friday for the week, and it's not looking good for SPY, not at all. So what that means for the wheel is if the market keeps going down, it's going to be bad news. It's going to be just kind of riding out the storm for now. If you're selling puts, you're going to be risking getting assigned with a higher probability than you normally would. If you're holding shares, it's going to get more underwater most likely if, you know, the market keeps going down. So selling covered calls will be tough. I already have a position in Intel where I already know a weekly covered call is just not going to be in the cards because it's not paying enough premium. So we'll talk about that. But first, let's go over a few names that I think you could sell cash secured puts on this upcoming week. We're going to start with CPB, Campbell Soup Company. Campbell Soup, come on, it's a staple. So if you look at this chart, you can see it's not a devastating chart at all. I mean, this is the past 3 years here, even just starting at 2020. It's been relatively sideways overall. You're not going to lose your shirt in this name. It's not going to drop 50% or anything. It's been holding up. So it's a nice defensive name to park your cash in if you want to have it in an investment. Obviously, it pays dividends, so that's always nice. You can get some value there. But point is, it's not going to kill you. It's been holding up relatively strong. When you look at the last 2 years, it's just been in this nice range. So you can trust it. I'm looking at the $46 strike here, indicated by the yellow line. So you can see there's a daily 200 moving average in our favor that it didn't quite touch, but it came pretty close. SPY, we already saw how SPY closed at the low of the week. On Friday, we closed at the low of the day. But look at Campbell Soup. I mean, it almost was flat relatively. It did sell off quite a bit, came all the way back up. So, and actually closed higher than the previous day. So that's very positive. And I think the 46 strike is going to be safe. Like I said, the 200 is there in our favor. You look at the prior area of support, even if it does close below 46, there's this whole zone here that I would expect to hold up, and maybe we push higher. Or at the very least, it's going to be a safe name to be in. You're not going to, like I said, lose a bunch of money on it. So I think this is a decent name to play. I think assignment risk is relatively low compared to other names. And even if you do get assigned, I think you're fine. I think it's a decent price. It's a good company. All these companies I'm going to show you are solid companies that pay dividends, that have positive earnings. Like you're going to be okay. Next one is Citigroup. Now this is a bank. This is a financial name, so you might not want to be involved, and I don't blame you. But the 39.50 strike is looking solid. I mean, this chart's been getting killed. We're oversold in the daily chart, and we're just playing 1 week. Remember that. We're just playing 1 week's time. So can we just survive 5 business days? Can it stay above this level for 5 days? That's all we care about. And looking in the past, maybe the weekly chart's probably better to look at. You can see we do have some areas of support coming up. I mean, as far back as, wow, 2016. We had a big sell-off in 2016. Right here is the COVID lows. So I think short term, which is what we're playing, just 1 week put, I think there would be some support down here, some buying to prop this up, at least for a little bit before an inevitable crash lower, if that does happen. We have COVID support. We have back here 2016. So definitely an area where you'd expect some buying. And the most recent low, most recent price action down here was at 40.50. There we go. So yeah, last time it was down here at 40.50, we bounced and never looked back. So 40.50 alone will be a decent area of support. So where it's just about now, like where it's heading next, should be the area of support. And that's $1 in between the current strike that I'm choosing, 39.50. So there's $1 of wiggle room in between the nearest support and our strike. And even if it does break that support, there should be other areas down here. Like this whole zone below $40 should be support. How far down it goes before bouncing, I'm not sure. But I think for 1 week's time, this should be a decent area to play, the 39.50 strike. So, and then Pfizer is the last one I got. I'm looking at the 42.50 strike. Zoom out here on the daily chart. Look left. You can see last time we were down here, in this little area right here, we had support. We went sideways around here. These are daily candles. We went sideways down here, lower wicks, and then pushed up, never looked back. Now we're coming back. We're coming back, and I think it'd be support again. As low as maybe like 43, 42.50, around there, you'd expect some buying because that's what happened last time. And that's if we get down there at all. We also have these most recent lows that we just had in the last couple weeks, as low as 43.50, another 20 cents lower. So we could possibly maintain this sideways movement, this little wedge, and possibly just go sideways, maybe move up. But if it does crack this near-term horizontal movement, we do have that support around 43, 42.50. And if it does break that and we do get a sign, there is this support as low as 41 in this little zone down here in 2021 is when that was made. So, and this is a name that I'm happy to play with. Like, I'm going to be selling a put on this name tomorrow. Citigroup, no. Campbell Soup, it's a good name, but I'm probably not going to do it because I already have other plans that I want to do, and Pfizer is one of them. It's a nice name. I like healthcare as a sector in this environment. Like, I think there's going to be names that are going to do better than others in a bear market, possibly in a positive manner. Like maybe Pfizer will actually rally while other things are selling off, or at the very least, they just won't sell off as much. And you can see it here. Pfizer didn't crack all support and close at the low like SPY did. Go back to SPY, you can see this. I had some sideways movement, then cracked through it, closed down all the way at the low. Pfizer, we're still above recent support the past couple weeks, so it's definitely holding up. And I think long term, this would be a good name to hold and to have. And those are the three names for cash secured puts. Now, me personally, I'm gonna do Pfizer, and I want to do DocuSign as well. I'm looking at the 47 strike on DocuSign. This is a name that I've been accumulating shares slowly, like 20 shares at a time. That's what I've been doing with a lot of names. I am now starting to get back into the cash secured put game because I think we just had a nasty sell-off. I think in the short term we might go, the severity of a drop might pull back a little bit and it won't be as bad because we just had a pretty nasty drop in SPY past couple weeks. Maybe we'll cool off a little bit. So I'm not too afraid to start selling some puts again, especially because we're at better levels too. Things have sold off. So instead of playing DocuSign at 68, now I'm playing at 48. I'm like, okay, I like that a lot better. Better value of prices. Like I said, I was buying shares. I would sell them for profit. And now that DocuSign's not through its recent lows around 51, I'm not really going to look to buy shares yet, I think I'm just going to sell a put instead, because DocuSign is a name that I do want to own. I would like to have some type of tech, like high growth type of name in the portfolio, and DocuSign's looking like a good one for me personally. I just fundamentally believe in it. I'm a fan, and I think these are good prices too. So rather than waiting for DocuSign to get down to like 50, 51 for me to buy shares, I'm just going to sell a put right away at like $48, $47. I think that's a good level to play. I'll get the premium. I don't expect to get a sign, but if I do, it would be a pretty dramatic drop. I would expect a near-term pop, or at the very least, I'll be at a very good, favorable price point, and I could start selling calls against it, no problem. Now, when it comes to selling calls, like I will have to with Intel, let's go to Intel now. This is a name that I'm holding. I have a full position, 200 shares. That's what I was building up to. I finally got it last week, and my average is at 27.67 at this blue line right here. So we're $2 below. I would have to, here we go. I would have to sell calls about 28, which is the nearest strike above my cost basis, and it's not paying enough. It's paying like $5, and personally, I don't think that's enough premium to justify capping your upside. Because who knows? Maybe, Intel releases some positive guidance, or they have some type of positive catalyst, and this thing jumps up to $30. I don't want to be capped with a covered call at 28 when Intel's at 30 and pushing higher. I mean, that will happen. Selling covered calls, that's going to happen. That's always going to be the case. But I feel like there's a point where the premium you get is just not worth it. And $5 I don't think is worth it. I would like a little bit more. Like I said, 30% annualized is kind of that benchmark for me. And unless I'm getting that, then I'm probably not going to do it. Now, the other thing I've been talking about with my plan B is to sell monthly calls instead. Sell monthly calls, and instead of adjusting the cost basis with the premium, I'm just going to realize that premium as profits on the month. That way, a losing position that's underwater that I can't sell weekly calls against is going to still make me realize gains on the month and build the account in the background while the unrealized loss does its thing. So that's kind of the plan there. I think I'm going to start that tomorrow. I don't know yet. I'll see what tomorrow brings. Maybe we'll push up tomorrow, gap up, push up, and then we'll see, how the premiums look there when if Intel goes higher. Otherwise, maybe I will do the monthly calls. I'm not sure yet. I haven't had to actually enact Plan B yet. ZIM is the other one that will definitely need a Plan B because my cost basis is going to be way too high considering the current price. But I need 20 more shares before I do any of that. So a lot of lines on this damn chart. But all you really need to know is that this orange line down here at 2262, can't see that, but right here, 2262 is the final level of ZIM where I'm going to buy 20 shares. And that'll get me to a full 200 share position. That'll be maxed out there, and that's where I'll begin to run the wheel on it. And in this case, I will definitely have to do Plan B on it and sell monthly calls because we are nowhere near the cost basis. If I do get 20 shares down there, my 200 share position will be at an average of like $31, which is $8 below or above the current price. So that's just way too far for weekly calls. It's not even close. So definitely have to do monthly calls on that one. But I got to get those next 20 shares first, which will probably happen the way ZIM has been going. We've been oversold for weeks now. We just sell off 5%, 8% every day. It's going to happen. And I'm going to have to hold this thing. It pays dividends. I like the company fundamentally, and we're at some severely low prices that I think it's a good value for the long term. And that's what the wheel is all about, getting good value for the long term. And if you can make a short-term gain on a name, take it, build the account, and move on. So that's the plan. It's just that short-term gain is hard to get in a market like this that's just selling off. So it's all about building your positions appropriately at decent prices, and then if you can, try to sell options and get some income that way, or lower your cost basis. But sometimes you just might have to hold through the storm. So Intel and ZIM are positions that I'm in right now, and then come tomorrow, I'm going to sell a put on Pfizer, and I'll try to sell a put on DocuSign. We'll see how we open. If we open low and sell off quickly, I might just look to buy shares again on DocuSign or get a better strike on a cash secured put. We'll see. But that's it, guys. That's the game plan. We're looking at Campbell Soup, Citigroup, and Pfizer as decent cash secured put names. And then me personally, I'm going to look at DocuSign, and I'll try to sell calls on Intel. We'll see what happens. If you want to know exactly what I end up doing, you can follow me on Twitter, link in the description, or you'll just have to wait for my midweek update video next week. So that's going to do it, guys. I appreciate you watching. If you enjoyed, hit the like button, subscribe for more content, and I'll see you all next time.